and welcome to today's market updates. Let's take a quick look at some of the key developments moving the market today, including the US dollar, oil price, gold, and AUD USD. We'll break it all down so you can stay ahead of the trends. Let's get started. First up, the US dollar. Yesterday, we saw a sharp decline in the US dollar index after the release of two important economic reports, the S&P Global Service PMI and the ISM Service Index. Both came in weaker than expected, which put pressure on the dollar. At the same time, Abraham Muslim, the president of the Federal Reserve Bank of St. Louis, made some hawkish comments, signaling that the Fed might not be looking to cut rates just yet. This gave the dollar some initial support, but it lost its momentum later in the day. Today, the market is awaiting comments from Fed Chairman Jerome Powell, which would add more volatility to the dollar's movement. With mixed signals from US Treasury yields, investor sentiment is a bit cautious. Despite a positive labor market in the US and an increasing in job openings, the dollar weakens as traders took profits after its recent rally. Economic data from China, like rate cuts and new stimulus plans, also weighed on the US dollar. Looking at the chart, the US dollar index has dropped to about 106.15 after briefly breaking above 106.5. There's support around 106 and the 25-day moving average is 105.85. If the index holds this level, we'll see another attempt to retest the 107 area. So if you're trading the dollar, keep an eye on these levels and upcoming labor market data for more direction. WTI crude oil price recently touched $70 per barrel, but we've seen a bit of a pullback as US crude inventories show an increase of 1.2 million barrels last week. This is adding some pressure on oil price. However, geopolitical tension in the Middle East are keeping oil traders on edge. Israel's ongoing military actions, along with threats of renewed conflict, are adding risks to oil supply. On top of that, OPEC is meeting this week and may extend production cuts, which could support oil price. From a technical standpoint, WTI crude is still stuck in a sideways pattern, with resistance near 71.15 and support around 68.93. If oil breaks above $70 and holds, we'll see a push higher toward 72.5. On the downside, 68 is a key support level to watch. Today, if you're looking to trade oil, a potential buy would be around 68.2 with a stop loss of 68 and a target of 69.5 to 69.7. Gold. After some consolidation around the 2640 level, gold price have edged up to 2650, helped by a dip in the US Treasury yield. Investors are cautious right now, waiting for more guidance from the Federal Reserve on interest rates. Gold is largely on a holding pattern, as traders wait to see if the Fed will pause rate hikes or take a more dovish stance. There's also uncertainty around President-elect Trump's inflationary policies, which will impact the Fed's decision. This keeps gold supported as a safe haven asset despite some upward pressure from the stronger dollar. Looking at the technicals, gold is still in a range with support at 2620 and resistance around 2655. If gold breaks above 2655, we'll see a move toward 2700. On the downside, a drop below 2620 would lead to a test of the 100-day moving average around 2579. If you're thinking of trading gold today, consider buying around 2645 with a stop loss at 2642 and a target of 2660 to 2665. Dollar. The AUD USD pair has hit a fresh 4-month low at 0.64 following disappointing economic data from Australia. The country's GDP growth has slowed, and with inflation now within the RBA's target range, there's growing speculation that the RBA may cut interest rates. In addition, US export restrictions on China and worries over China's economic recovery are adding pressure on the Aussie dollar, which is sensitive to China's economy. The US dollar remains stronger due to Fed's less dovish outlook, which is waiting on AUD USD. Technically, the pair is still in a bearish trend with a resistance at 0.65 and support at a recent low around 0.64. If the pair breaks below 0.64, it will retest the year-to-date lows around 0.635. If you're looking to trade the Aussie dollars, A long position would be considered around 0.6415 with a stop loss at 0.64 and target of 0.647 to 0.648. So, to recap, the US dollar is facing some pressure today after economic reports and mixed signal from the Fed. Oil prices are consolidating ahead of OPEC decisions, while gold remains supported as a safe haven asset. The Australian dollar is struggling with more downside potential on the horizon. Make sure to keep an eye on the key data releases this week, especially the labor market reports and comment from Fed Chairman Powell, as they will likely drive market movements. Thank you for tuning in to today's market update. Don't forget to like, share, and subscribe for more daily insights. See you next time.